Welcome back to the second half of the Future Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Scott Bauer joins us from Prosper Trading Academy to talk commodities. Scott, welcome. And I want to get your thoughts on the Fed, but before we do, an interesting divergence to begin the week. We saw crude, the ES, ES lower, crude for the most part had been higher, but it seems to be resolving itself to the downside.
It is a little bit right now, but that divergence it's really all, risk on, risk off. And then when you talk about crude specific, you're talking about the ever evolving state of the pandemic, right? Which has really played havoc with both supply and demand over the last 12, 18 months, and certainly recently here. And, as a consequence of that, we're seeing just incredible volatility in the commodity space, in the oil space. Now, what is also behind, holding oil up right now is obviously what's going on in Russia and what's going to happen there, because if they actually do go ahead and invade Ukraine here, that could have a very consequential impact on global energy supplies. And so you've got, the tailwinds in the oil space, in the energy space, massive headwinds in the equity space, in the ES here, and that's why you're seeing that divergence. But as you said, Ben, I think we are going to start to see a little bit of more normalcy with that.
Yeah, I guess that's the question. At what point do the headwinds, if they continue to play out in terms of the indices, become, start to slow some of the tailwinds that we've seen that have been propelling crude? We're looking at that here right now. The ES, if lower this week, 4 in a row, and it would be the first down week for crude after a run-up, it looks like, 5 to the upside, 6 of the last 7 recently. Scott, talk to me in terms of it's not just crude. I mean, other products, natural gas, heating oil, RBOB, gasoline. I mean, these are the products that directly tie into that inflation discussion as well.
No doubt about it, but it's real interesting to look at the NG, at natural gas here, because after those highs that we saw, about 2 months ago, it has just plunged. And now the latest report was the December inventories ended 3% higher than average, and the EIA is predicting that March inventories are going to be 8% higher than average. So that is absolutely keeping a lid on prices of natural gas right now. The bears are firmly in control right now in natural gas, which is just the opposite of what we're seeing with crude.
Interestingly enough, though, again, kind of tying back to what we were just talking about before, not necessarily in Europe. I mean, prices have come down here in the U.S., but the geopolitical tensions and some of the activity in terms of tying back to the pipelines and some of the, issues there ultimately, have kept prices elevated.
No doubt about it. And again, a lot of that goes back to the geopolitical tensions of Russia, Ukraine, because Russia supplies so much oil and gas to Europe. And, if tensions escalate and if things get to, an invasion here, they provide 30 to 40% of all of Europe's oil, gas, and coal. So that's where you're seeing a big divergence there versus what we're seeing here.
When we were talking about that interesting divergence as far as crude versus the ES, I showed the product side by side on a weekly basis. Let's just take a quick look at the daily time frame here. Just a different look at the same thing. And again, crude on the rise, continuing higher, telling a little bit of a different story. It's a purple line. I got the ES in the candles, and you can see the declines we've seen there. I mentioned recently back down to near 4,200. They've come off that low, 43.31 right now, still down by about 1.5%. Scott, talk to us, because some of the other commodity products you're watching tie directly into this. I mean, ultimately, I've heard a lot about wheat and the grains as far as the tie to Russia and the impact that this geopolitical event could have on prices there, and not only wheat, corn, and beans as well, though.
No question. The March contracts, jumped 55 cents each, and same with both wheat and with grain. And certainly this is all surrounding the concern of Russia invasion there. So, how much of that, if things do simmer down, if things, de-escalate a little bit, how much of that are we going to see back off there? And it's very, very difficult to tell. Right now, there's a lot of pressure to the upside of that. However, if I was going to do something in that marketplace, and I'm not, I would be leaning towards the short side and taking advantage of these prices where they are.
Okay, well, we've seen a series of lower highs, so it'd be interesting to see if we can get up above 8.25 here right now. I think that's the next threshold, 863.25, ultimately the highs that we saw into the end of last year. We're back up above the 50-day moving average here. Scott, let's talk metals, because I've been talking about how gold, amidst the geopolitical tensions and some of the activity, speculation and rates and the selling in the indices, kind of a level-headed approach towards all of this, comfortably holding above 1,800, but not really seeing much in terms of breakout type price activity one way or the other. It's holding these levels pretty solidly.
Yeah, I don't know if it is much level-headed, which I agree is it is confusion. There's a lot of confusion about what's going to happen, with what the Fed is going to do. And like you said, it is just in this holding pattern. And it is very surprising to me, given the Fed and especially given the geopolitical tensions and where the risk off in just about every other asset class is so predominant right now. Why isn't gold higher? It is very perplexing to me.
Gold right now, let's pull the chart, hanging out right around this 200-day moving average, just above it as we speak. And then if we could just show this here, you can see it's been, again, teetering around the 1,800 level, I guess is the best way of putting it. Here's a look, another closely watched average, the 50-day. We're back up above that. It comes into play around that 1,809 level. I kind of think about, while we're talking metals here, silver, copper, and the rally in gold. I mean, ultimately, I think about these industrial expectations, infrastructure spending, and some of the other, things that in theory are supportive of some of those commodity prices. Silver's recently a nice run up. Copper seems to have been supported. I mean, industrial metals are signaling at least that some of the Omicron concerns and while Fed tightening ultimately isn't necessarily going to be as big of a headwind for some of the industrial metals and expansion there.
No, and you would think, especially silver and copper, that those would be the two that, given any expansion of building and what those are used for, and whatever the Fed does, you're right, those should be bid up. They absolutely should be bid up. And I don't understand, quite frankly, why silver's not higher. It's rejecting at the 200-day moving average. I would watch that 2310 area, which is the 50-day moving average. But listen, if Omicron is on the decline, which we all think it is, we all hope it is, and if economies around the world are going to start ramping up again, those would be two places you would think would just absolutely be on fire.
I want to take a look at silver right here, as Scott mentioned, holding similarly as gold to right around the 50-day moving average. Scott, before we let you get out of here, I wanted to get your thoughts on Bitcoin, and we could pull the chart there, but first, take a look at the silver chart again and that 50-day. It's recently run up, but now that I look at it, Scott, a series of lower highs still kind of in play here as we look like we might be rolling over here, and we've struggled to get anything going up and through 25 basically since we got back down below what we're talking last summer. Scott, what's going on with Bitcoin, the selling there? I mean, it's got to have the bulls somewhat rattled, to say the least.
It absolutely does have the bulls rattled. There's no question about it, Ben. And I think we had talked about this last week, that 38,000 was a real important number. It had hit that a couple weeks ago on a flash and bounced off of that. And then it just, went through that like butter. It just really just pounded through that. So the next psychological big area is 30,000, but that is really just, like I said, it's psychological. It is not really any big important technical area here. But yeah, Bitcoin is on its heels, crypto is on its heels, and it's just another, it's that overall macro sell-first environment that we're in right now, regardless of whether it's in the cryptos, the equities, whatever it is.
All right, Scott, we're going to let you get on with your day. Appreciate you joining us this Tuesday morning to talk commodities. Scott Bauer is the CEO of Prosper Trading Academy, where you can check them out. And, well, we're going to take a quick break. Stick around, though. When we come back, we're going to bring in Kevin Hinks. He's going to join us to take a look at his paper money trade. We'll get ahead of some of the economic data that's headed our way today, some numbers that you should be dialed in on, some housing data, and we'll take a look at my chart of the day. There's lots more futures to come. We'll be back after this short break. Stick around.